Hello everybody, my name is Brian with Trading Tactics and I want to take you through a journey in this video. This journey is going to be the S&P 500 of where we came from in 2020 all the way through 2022 and what that might mean for us in 2023. Now, just like everything else, just like history, we have to understand and know where we came from and how we got to where we currently are in order to have an idea of where we might be headed in the future. Now, we need to know this information for our trading, for our investing, and things like that, so that we can make good decisions for the right reasons, so that we manage our money, that we're good stewards of our finances. Now, that's obviously an incredibly important thing because we're all wanting to grow those finances. We're wanting to grow our resources so that we can live wealthier and easier lives. It's everybody's goal with the market. Nobody came to the market to get poor. Okay, we all came here to try to make money. So to do that, we need to take every advantage that we can, or use every advantage that we can, use all the leverage that we possibly can, and just have a good idea of what's going on in the markets so that we can make the right decisions at the right time. If you want to find out more about how we got to where we currently are and what that might mean in the future, then please stick around until after the intro. Until then, hit that like, notify, and subscribe. Let's rock out and we'll dive right off. All right, so here we are with the daily chart. The platform that I'm using is going to be Edge Pro X. This is available to anybody who wants to set up a brokerage account for futures trading with Edge Clear. Edge Clear is one of our partners. I absolutely love Edge Clear. If you're looking for a futures brokerage, if you're looking to get into day trading, I strongly advise you to check out the futures market. If you like what you see and understand and really get the feel for it being a superior product and a superior market in pretty much every way to the equities market, then please check out Edge Clear, because that's going to be the broker that gives you the best bang for the buck, especially when it comes to customer service. And if you talk to these guys, do your research and everything else, then tell them that Brian with Trading Tactics sent you. Okay. So with that said, now you know what platform that I'm using, what it is that you're looking at here on the screen. We have the S&P 500 daily chart. The traditional candlesticks, nothing but volume by time with a 200 moving average down here. And you can see the little line that we have running through it is just a 200 SMA. Okay. And of course, that's going to be the traditional volume by time, or volume quantity, people will call it, indicator. So nothing special at all. Now, I do have a couple of guidelines set up here. We're going to talk about those. We're also going to talk about some Fibonacci stuff in this video. But in order for any of that stuff to be useful, we need to zoom out. We need to understand how we got to where we currently are and what that might mean for us in the future. Now, just to get you oriented to the charts, everybody is probably familiar with this already, but that's going to be the COVID low. And that's going to be around March of 2020. And this is going to be the all-time high here. And that's January of 2022. And you can see in between the two, we had this massive rally up. Okay, one of the most impressive bull markets that we've had in a very, very long time, perhaps ever. And this is kind of one of the reasons why trading right now is so difficult, is everybody got spoiled to these just great conditions where you buy and hold pretty much anything and you make money. That's not how the market's been working very well so far this year, or at least in 2022. And we're going to explain why 2022 became so difficult to trade for so many people. Kind of understanding, those 2 points, the low and the high, we can kind of see where what price did. And once it came up in this area, you have somewhat of a head and shoulders. Now, everybody who's followed me knows that I don't put a lot of weight into trading patterns, but I do recognize the context that they give. And we see that we have pretty much a neckline break with a retest and it wanting to head down now. Now, we can take this area here and look for a possible price target like that. And you see that we've hit that price target already. So what does that mean, up or down? Nobody really knows yet. We're in a consolidation period currently. So the market could break up or break down in the short term. And once it gets to these levels, which we'll talk about in just a moment, We don't know if the market's going to want to fade back towards the center or break out and run. Okay, so there's a lot of what ifs that can happen here on the charts. And it's important to understand, what the market's actually doing so that we can make good decisions when it comes to how to set up to trade these things. So with that said, let's talk about these two lines that I have on the chart, and we'll talk about volume and what that volume might mean. And then we're going to dive off into a lower time frame and get really granular for people who want to trade a little bit shorter term, like I do. I do day trading. This is more of a swing trader, or a big overview of what's going on here. Now, the lines that I have on the chart at 42.15 and 35.94 are pretty much coming from this area of consolidation and this area of consolidation in the market from the rally side over here. Okay, so I just pulled those, the top of this one and the bottom, or in the top of this one, and pulled it over to the right. Is all we did with these lines. That's going to give us an area of supply and demand that we can use as support and resistance. So we would have supply on the top side and demand. And anybody who trades, this kind of stuff knows that these are going to be zones that we look for or look at. And there's going to be a couple of different ways that we can interpret that. We can modify that data. So just keep that in mind, that nothing is final on any of this. There's a lot of things that can happen with the market, especially with the crazy stuff that's going on with biblical weather and wars and supply chain disruptions and a pandemic and all this other stuff going on. There's a lot of things that can mess with the market. So initially, or basically what we're going to want to do in this is we're going to be wanting to keep a good eye on volume down here as we approach these levels. All right. So once we get up to these levels, we got a choice to make. We have to understand really quickly, if we're going to actively trade, are we going to break out or are we going to fade back to the middle? And again, like I said, we don't know until it happens, but volume is going to be a pretty key thing to look at. Now, if we look at volume overall and just kind of get a picture of it, and let me zoom in just a little bit so we can do this a little bit easier. This is our all-time high here. So that's January of 2022, and we can see that right there. We pull back down through here, bounce around on this area as a support, come up off of it, form a lower high. As we form that lower high, if we look straight down over here, we are at low volume. So we'll just put low volume here. That was a low volume pullback. Okay, and the market pushes down out of that. It comes back down over here. We have higher volume. That volume stays relatively high through all this chop. And whenever we start spiking down, we have high volume. So we're seeing that the market's wanting to push down. That's confirmed with volume. We get back to where we start pulling back. And if we look at where we're at with that 200 SMA, we stay relatively low volume through this entire time. And that's going to be another lower high. So we have lower lows over here, lower highs over there, low volume, high volume on the shots down. We are definitely in a downtrend for anybody who didn't know that already by looking at the chart and understanding the price and feeling the pain of this. The market set up a head and shoulders again, type pattern right here. You can see that little structure broke down, retested. That would be the textbook perfect entry, shot down, came to this area. Now, once we get to this area, we have high volume. So mark that out. And again, high volume hitting that. We have that little double bottom here. And the market starts pulling back up. And what's volume doing on the pullback? That's happening right now. It's lower volume. So we can assume that the market doesn't really like this. There's not a whole lot of excitement going on into this. Now we do have a little bit of a spike going on right here. Found that resistance. Volume did pull back from here. Now we're in a consolidation. The market's showing us some indecision. We don't really know what's going on, but we know that A lot of resistance was found in this area, so we know that we want to study that candle and figure out what's going on there, and that the market is consolidating this area. So we want to know what all is going on in here, and it would be good to keep these levels in mind in the future. So we have 35.94. Let me clear the screen. I'm going to try to remember to leave these up on the screen. 35.94, and we have 42.15. Now, the last thing that I want to show you on this, and I'm going to clear these guides, is a Fibonacci retracement between these two numbers, or these two areas. So we're going to go to the COVID low to the all-time high, and I want you to pay particular attention to this right here. We hit that 50, I mean dead on, and pull back. That's going to be a halfway back or 50% retracement. And I know that the 50% isn't actually a fib level. It's on everybody's fib extension and fib retracement tools, but it's not actually a Fibonacci number. Now, with that said, the 50% retracement has been used by traders for a very long time, in technical trading, technical analysis, investing, and everything else. It's not anything revolutionary or new or whatever. The halfway back has been around for a very long time, and we're seeing prices push up from that and actually holding on that 38.2. We see that happening right here with this current consolidation. So there is an argument for the bulls here that we may see some break to the top side. Now, with that said, we know that we have a lot of trash going on in the world as far as news, with the Fed talking seemingly like every day and trashing the market one way or the other. And we have all these crazy things going on in Europe and Southeast Asia and the pandemic and so on and so forth. So there's a lot of things that the market needs to combat to go to its natural bullish state. But I'm looking for a potential pullback to this area here with, of course, resistance at the last high. So those are going to be two zones that I'm going to be looking at as potential price targets if we break to the top side of this consolidation. Now, if we break to the bottom side down here, we also have some pretty easy places to look. But we also have to start looking very far back in the past if we break through that 34.91 that we have right here. And to do that, I mean, we're going to dive off into this a little bit more, but we have obviously the COVID low. We have some sideways walking consolidation in the market here. We have some here, and we have what we're currently interacting with right here. And we know that the market's been pushing up out of this area, and that makes sense because that was the high before the drop. So we know that the market was naturally wanting to be at this spot. This was fair value prior to COVID. Now, after COVID, we don't know if that's going to be the case or not. We're going to have to see how the market reacts to this level. So far, it's holding up on both of these. It's holding up. But the more times that this is tested as a support, the more likely it is to break. And if the market were to come and start breaking out of this area, then we only have a few other places that we can look for to find that consolidation, those potential downside price targets prior to hitting that COVID low. So it is a possibility that we go that low. I'm not saying that we are or that it's likely or whatever. I'm just saying that it's a possibility, and it's not something that I'm willing to rule out personally. Now, based off of what we got going on with the Fibonacci, it looks like we are more inclined to either continue the sideways walk between this support and this resistance level, or that we are about to have some bullishness and potentially break out, hopefully return into that just bullish buy and hold market that everybody absolutely loves because it's easy for us to make a ton of money in. Now, leaving these numbers up on the screen so that we can remember where they're at whenever I switch to our other chart here. So 42.15 and 35.94. Let's go ahead and set those up. Let's see, 35. 95 is close enough, and 42.15. All right, I'm gonna get rid of that. So we have these two areas here, And the reason I want to show you that on this chart, we'll get into that in a minute. Let's get you oriented to this chart so you know what it is that you're actually looking at first. So this here is our daily volume profiles. The entire chart is going to be regular trading hours. I don't have any extended hours at all on this. We have VWAP on the chart, and we have the volume by time. Okay, so not anything really crazy going on here. Pretty standard chart for anybody who's day trading or even setting up swings. This is pretty basic. The candlesticks that I'm using on this are the 3-minute, and I absolutely love the 3-minute chart with this because I feel that it gives me just enough detail to where I can see what's actually happening without any large candles that make it difficult to analyze what's going on inside of the session. And by the session, I mean each day for anybody who doesn't follow the technical trading lingo that we have. It's almost like in the military. You almost have to learn another language. Now I want to come far enough back to where we can kind of see what's going on with all of this. We see the market has spent an enormous amount of time in between these levels. Okay, and this is, if you remember, this is going to be those that level of consolidation that we're currently in the market. So we starting back all the way in. Let's see. Let's go back and let's just call it early May of 2022. We've been respecting these areas. So it's pretty safe just looking at that to call this resistance and support. Okay, so we know that those major areas are up there. Now we're not near either one of those currently. Okay, so we're floating around in no man's land in between the two, trying to figure out what's going on. So we have to dive in a little bit closer if we're going to swing trade short-term swing trades, or like me if we're doing day trading. We need to know where those upper and lower limits are going to be. So I'm going to set up a couple of more guidelines here. I'm going to place one here and place one here. And I'm going to explain why these specific spots. We'll start off on the one on the bottom. We see that recently prices have moved into this area. Okay, we came in, we did all the things that we've done. We've hit this area here a couple of times, and now we're back up out of it. If we look at this area here and we study what's going on with the value that's being shown in the market, the value areas of the profile, which is going to be the blue area of the profile for those who aren't familiar with it, and that's going to represent where 70% of all contracts trade. So that's going to be where value is. It's going to be a concentration of trading activity. And if we look at where that is and just kind of really make it obvious with our little yellow squiggles here, the market's not going anywhere. Okay, and specifically whenever it comes down here, it just did not like establishing value down in this area at all. In fact, if we look at it, it just violently reacted to being down here twice. So we know that this is going to be support. We have evidence that this is going to be a strong level of support. Likewise, we have this level of value here. The market pulled away from it, pushed back to it, tried to get back into that area, pulled away from it. We know that we have resistance. So if we have a known level of support and resistance, and by the way, this is a zone and this is a zone that we're going to be looking at, then we're going to be looking for what price does as it comes to these areas. That's going to be how we react to our trades. If prices, specifically if volume, doesn't support a move outside of this area, then I'm going to be looking to fade back towards the middle. Whether the market goes up or down doesn't really matter. I know which direction I want to go based off of where it's at with support and resistance. I want to go long off of support. I want to go short off of resistance. If we have a breakout, I just want to go with whichever direction we're breaking out. Of course, I favor the long side. I would rather us to return to a bullish market because that's better for me and my investments and everybody else in the world as well. It's just better for everybody overall to have just a booming economy. But that doesn't seem likely based off of the fact that the Fed is actively engaged in trying to stifle some of the growth in the market right now, slow down the inflation and get it under control and all of that. It's more likely that we're either going to continue to range or drop. That's just my very unprofessional opinion on this. If you want good financial advice, I recommend going to a financial advisor. That is something that I am not. Okay. So please, before you do anything with any of this information or take my opinion as any type of fact, run it by your financial advisor, see what they think, take their advice, not mine. Do your own due diligence. You know the drill. Okay. So with all of that said, I'm looking at fading the market. I'm expecting the market to continue its current behavior rather than expecting it to break one way or the other. Now, if it does break, it'll be confirmed by volume or to be rejected by volume. And we see a rejection of volume by volume right here. We don't have a spike in volume until we actually get out of this area. Okay, so that's not showing us any excitement or urgency from the sellers to push this market down. That showed us just the opposite, that there was a lack of interest in this area. Same thing up here. We don't see anything major going on with volume that changed as prices got into this area. There was no interest from buyers to push back into this value. So we know that this area here is fair value. Just like we said up there on the, in the larger on the larger time frame, we identified where fair value is. We know where fair value is now. Now, to day trade this, obviously you would have to dive off further and further, and we have to react to these different key levels, these profile levels, and all of that on the day-by-day, session-by-session basis. But we have an idea of what we expect the market to do at some pretty key levels on the chart that we're going to want to have marked up, whether we're swing trading or day trading. We're going to want to know where these levels are. And to get very, very specific, just to show you what my chart will be looking like as we move into trading our first trading day tomorrow, that I'm going to have this zone or these two zones of resistance and support. And that's where I want to be looking for prices to break out of or to reject. Okay. So I'm expecting that prices are either going to support or reject the resistance. It can't do anything else other than that. But I'm going to be looking for evidence of which way the market's going to want to run as it comes to these levels. And if I could figure that out, if we can figure that out, then there's going to be a lot of money able to be made off of these moves because we could potentially run this from coast to coast on some large trades. We could look at taking it from this support all the way to this resistance or vice versa. Okay. And there's a ton of movement in here. You're talking a couple hundred points worth of movement, thousands upon thousands of dollars worth of profit for each individual contract. So very important thing to look at. Some very good levels, I believe, will be valuable information on the charts in the near future. And especially if we get that fade to go from one side to the other. If we get the breakout, all bets are off. If volume is supporting that breakout, then it could be some pretty easy trading in one direction or the other. So with that said, I hope you found some value in this video. I plan on releasing a ton of videos here in 2023. Very excited to get all of my recording studio and software and all of that stuff back up. Got the new chart platform, just incredible visuals, incredible tool for trading. Really looking forward to diving back into it, getting back in with the community and everything else. If you want to learn more about technical analysis and tactical trading, strategic trading, methodical trading, then please, please, please visit our website. The link's going to be down in the description below. You can find out more about our courses, our community, our email, and just some information that we have on our blog, which is going to be part of the community itself. Hopefully, you want to get plugged in with us. I would love to see you become part of our family. Right now, we are looking for new members. So with that said, thank you very much. Hopefully, I was able to keep your attention this entire time. Hopefully, I was able to pass on some good knowledge, some good information to you. Again, please check with your financial advisor prior to placing any trade, and please verify any information that you get from me or anybody else online with your financial advisor to make sure that it is something that you should be doing. Okay. Don't take anybody's word as advice. Your trades are your responsibility. Manage your money, manage your trading wisely. With that said, thank you, thank you, thank you for watching. Please like, notify, and subscribe. Visit our website. Take care. God bless.